In the meantime, sharp swings in global financial markets in the past few days are not worrying since economic growth is strong, but reforms are still needed to avert future crises. This is coming from the Managing Director of the International Monetary Fund, Christine Lagarde. Ms. Lagarde, who was speaking at a conference on global business and social trend in Dubai.
In her first public comments on market movements since the latest round of turmoil at the end of last week, Ms. Lagarde says she's not ringing the alarm signal, but the strong encouragement and warning signal.
The market trepidations that we have seen in the last few days are not worrying me about the imperative of fixing the roof. Those market movements were clearly, in our view, necessary market corrections. The markets have functioned well. There is plenty of financing that is still available to finance the economy. So I would not focus on what has happened in the last few days. I would focus on the imperatives of change going forward.
Global stock markets were hit by wild fluctuations, with the U.S. benchmark S&P 500 tumbling 5.2% last week, its biggest weekly percentage drop since January 2016. The volatility was fueled by investor worries about rising interest rates and potential inflation.
We need to anticipate where the next crisis will come from. Will it be the shadow banking, the good shadow banking, the not so good shadow banking? Will it be cryptocurrencies rising to the sky? I'm reasonably optimistic because of the landscape that we have at the moment, but I'm ringing not the alarm signal, but the strong encouragement and warning signal that things must be done and we cannot just sit back and wait for growth to continue as normal.
Lagarde repeated an IMF forecast originally issued last month that the global economy would grow 3.9% this year and at the same pace in 2019, which she said was a good backdrop for the needed reforms.
The growth that we have around the world at the moment, 3.9% next year, is a good background against which to try to fix the roof. And this is not just about this region. I did mention numbers for this region because we care and we are here and we work for the region.
The IMF boss says economies were also supported by plenty of financing available.
And back here, Egypt is considering plans for a Eurobond issue, but wants to see more stability in global financial markets before it goes ahead. The Finance Minister, Ahmed El-Gay, says the issue is expected to be around $3 billion to $5 billion in size. Last Sunday, before last week's massive volatility in global equity and U.S. Treasury markets, Gay said Egypt expected to issue U.S. dollar-denominated Eurobonds worth $4 billion to $5 billion within days. He also provided figures suggesting foreign holdings of Egyptian Treasury bills, which soared after the late 2016 devaluation of the Egyptian pound, were continuing to rise. Inflation has also been coming down after a spike in the months after the currency devaluation. Annual urban consumer price inflation eased to 17.1% in January from 33% in July. And South African tycoon Christo Wase has cut his stake in retailer Steinhoff International, which has been embroiled in an accounting scandal, to 6.2%. Wase, who stepped down as chairman of Steinhoff in December, had been the top shareholder in the company, which is fighting for survival after it discovered what it called accounting irregularities, sparking a selling frenzy that wiped off more than $10 billion of shareholder value. Wase has slashed his stake from around 21% to 6.2%. Wase was instrumental in transforming Steinhoff from a small furniture outfit into a retail empire of more than 40 brands that include Conforama in France, Poundland in Britain, and Mattress Firm in the United States. And South Africa's Reserve Bank says the Bank of Baroda, India's international bank, has notified the Office of the Registrar of Banks of its intention to exit from South Africa. According to the Reserve Bank, the registrar, which is part of the South African Reserve Bank, is in discussions with the Bank of Baroda to ensure its orderly withdrawal from South Africa so that no depositor is disadvantaged. And Acacia Mining has scrapped its 2017 dividend after core earnings fell by more than half because of a ban on unprocessed mineral exports in Tanzania. The company, which is majority owned by Barrick Gold, said full-year earnings before interest, tax, depreciation and amortization fell 38% to $257 million after taking a $644 million impairment charge. And West African neighbors Senegal and Mauritania have signed an agreement pledging to work together and split production from a giant new cross-border gas field being developed by Cosmos Energy and BP. The Greater Tortue complex, which straddles the two countries' maritime boundary, is estimated to hold more than 25 trillion cubic feet of gas. It is due to come online in 2021 with production to be exported via a liquefied natural gas facility. Senegal's president signed the Intergovernmental Cooperation Accord with his counterpart, Mohamed Al Abdelaziz, during a state visit to Mauritania. And the world of oil prices rose by 1% today, recovering at least some of last week's steep losses as Asian stock markets found their footing after days of chaotic trading. Looming over oil markets, however, was rising production in the United States, which is undermining efforts led by the Organization of the Petroleum Exporting Countries and Russia to tighten markets and prop up prices. Brent crude futures were at $63.42 per barrel, up 63 cents from the previous close. U.S. West Texas Intermediate crude futures were at $59.83 a barrel. That was up 63 cents from their last settlement. We'll take a quick break, and when we return, Ryanair to start a recruitment drive for pilots in South Africa. Details in a moment. Stay with us.